have a list
Uh,
of
I
the.
didn't hear
Huh?
I didn't hear the voice of the live
Basically,
stream.
we have a list of all of the stocks that we're using, and then we're going to.
You want the stocks that we have?
Yeah, so it's just going to be these
Yeah.
top ones.
All right. So here it.
Except for obviously we're going to skip Bitcoin and we're going to skip Ether. So we have Tesla, US. Well, US dollar also is not applicable either. So we basically have Tesla, SPY, QQQ, Apple, and NVDA, Microsoft, and Amazon. Okay, so those are the stocks, and we just want to make sure we have the links to the chart. So in my mind here, so we're dealing with 7 stocks. So basically, in my mind, we don't really need to have the actual link, to the chart. We don't need a complicated chart. Like, so for example, Tesla, I think just the overview is more than enough because all we need is the chart itself, So I'm in the notes right now, line 80.
Mm-hmm. Yeah, I'm here.
I would just link the overview. So let's take a look at the overview real quick of Tesla.
Mm-hmm.
Also, it has the link to the more advanced chart. So if you do want more advanced data, you can. So this has the last year. We can look at the last 5 years. I think we probably are more interested in the last 5 years than the last year.
Mm-hmm.
The main thing is obviously, it did go up, but it's still kind of on a downward trend, right?
Mm-hmm.
So I think this is all you really need. And look, you can click on this. You can even see the buys and sells. So you can see how it's like it went on an upward trend, but it basically just came to the existing downward trend. So, unless it crosses above the downward trend, most likely it's going up. And even if it crosses over, it's like we don't have to go all in on it. So that's my opinion, is that this is more than enough. And then if you want more advanced data, you can get more advanced. Let's click on the forecast to see what it says.
$24.
What?
Yeah, they give you a very big range for the next year.
Yes. Yeah.
But they also advise to buy.
It's not a particularly interesting forecast.
Yeah, it's not really.
It's like it could go up like double in price, or it could completely crash.
Exactly.
It's funny. All right. Anyways, they say to buy, but I think the buying is still not accurate because it's not based on anything that we are interested in. So we have a very specific model of how we can utilize, their buying algorithms, and it's not based on whatever this is.
Mm-hmm.
But it's similar. It's just not clear. All right. Anyway, so that's not helpful at all. So let's just look at the overview. We have the chart. I think we have our percentage already. So for this one, we said, and we do want to look at the 5 years. For this one, we said 30%. Wasn't that what we said? 30%. So max would be 100% in this case.
Mm-hmm.
So all we're going to do for this particular responsibility, and this is responsibility
3, right?
4. 3?
4.
3.
What?
Let's see.
You said.
Yeah, responsibility 3. Those are responsibility 3. It's just the percentages, and it's going to be from 0 to 100. From 0 to 100%. So for Tesla, I mean, I think we could do. I'm fine with anything from we could do 35. I mean, 50 would be the mid, and I don't think it's mid. It still looks like to me like it's going down. So I would say 35 to 30. I don't know. I think 40 would be my max. Somewhere between 30 and 40 is my. do you think? 35?
I think 30 is good.
30? How about 32.5?
All right. Yeah, it's okay.
All right. So then for SPY, we would get the chart. So we just come back here. And we would go to search SPY. And we'll look at the overview. And do the 5-year. So this is much more flat. You know, so you can see it went down a little bit, and now it's sort of going back up currently, and it's a little flat. So for me, I feel much more comfortable about SPY. You know, maybe not 100%, but you know, 60%. I would go anywhere from like 50% to 60 to like 75, even 80%. That's where I'm at. So I'm at 55% to 85%. Oh, and let me get the link.
Yeah. So basically, the more stable, the higher the number.
What?
The more stable the chart, the higher the number.
No, the more stable the chart is. Well, no, stable would be flat.
Yeah, flat.
Yeah, so flat would be 50%.
Okay.
Right? So if it's flat, it's 50%. If it's going up and it's stable, that's 100%. If it's going up, but it looks like it's about to crash, that could be anywhere from 0 to 40%. Right? If it looks like it's crashing and it's gone all the way down to the very, very bottom, that could be 100% or 90% or 80%. You know, so it doesn't matter what direction it's going, really. What matters is the trajectory of where we think it's going to go, right? So right now, you know, obviously this went up, 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 and up, but here, even though it's the very top, you could still be, okay, well, it's been going up and it looks like it's going to start crashing down. You know, we want to not hold 100%. Maybe we only want like 60%. Right? But I would say in this part, it looks pretty flat. I mean, this is almost 10 months of flatness, you know? So the probability of that continuing or going up is very high. So for me, that's reasonably positive. It could also go down for sure, but that's why we're not going on 100%. So do you just don't care, or do you think those are good numbers, or what?
No, I think it's good. I mean, 55, 85. But so this is how much we want to have in our portfolio for SPY.
No, this is just the percentage of value in terms of like 100% means that we think it's going to go up, 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 up. Stable up is 100%. Right? Does that make sense?
Yeah.
Yeah. So this is just a quick kind of just like guesstimate. I mean, we're not trying to be perfect here. That's where root comes in. Root comes in where it's like we're just trying to diversify, but diverge. This is what we're doing now is just the diverge calculation for the simple investment model, where it's just like, you know, oh, we're just playing around with numbers and we're just kind of, you know, rolling the dice and guessing just for fun, but you know, with a little bit of review of the chart. Right. So in this case, let's just say 65%. That sound good?
Yeah, 65. Yeah. Stable up. It's probably gonna go up.
Not stable up. Stable up would be 100%.
100%. Yeah.
The fact that it's not stable up and instead it's actually flat with a little bit of up, 67%. You see the difference?
Yeah.
All right. So next is QQQ.
QQQ.
We're doing 5-year chart.
So QQQ is
flat going down. What?
Yeah, QQQ is flat but going going actually down, right?
Yeah. So 45%, which would be fine for me.
Yeah.
I would say 45. What do you think?
Yeah. So 45% that we think that it will keep going down. That will keep the trajectory, or 45% that it's gonna go up. The price.
Well, okay. So 50% basically means it could go up or down. So when you're at 50% going up or down, basically means that if it goes up, you're not really losing anything. If it goes down, you're not really losing anything because you're right in the middle, right? If
Yeah.
you know it's going down, you want to sell all of it, and you go to 0%, and that means you're making money if it goes down. If it goes up, you're losing money, right? But as long as you're at 50%, you're basically not losing or gaining money. You're just kind of like, it's the same as root, basically, you're just root, right? Because you're at half.
Yeah, but we're saying 45% here. 45% we think that it will keep this trend, or 45% we think that the price is gonna go. There's 45% chance probability that the price will go up. That's what we're saying, right?
We're saying here that there would be a 5% chance that the trajectory value would continue to go down.
There's 5%. 5%.
So 50% would mean that it's totally flat.
Okay.
Right? So 50% would mean that we are 100% sure that basically this is going to stay flat. That makes sense? So we're just 50-50, right? But because we're saying 45, we're saying, okay, there's a 5% chance we're putting 5% of our value, right, into the value continuing to drop, right? In which case, if the value continues to drop, even just slightly, we're actually making a small amount of money on 5% of our value, right? The value goes up, we're losing that 5%, but it's like it's only 5%. Does that make sense?
Yeah. So here we're saying that 5% chance the value will go down.
It's not really a chance. It's more of like we are betting 5% of our value that we would expect the value to continue to go down, but we don't really know. It's basically flat. Does that make sense?
Yeah.
So we're the term I would use is that we're betting 5% of our value that it would go down. So 50% is flat, but it's not going up or down. Right? And we're saying, okay, it's a little down. We could say, okay, 40, 43, that we think it's going to go down a little bit more than 5%. Maybe it's 8%, right? We're betting. Whereas with Tesla, we're like, okay, it looks like Tesla's going to continue to go down. And we're basically betting, over like what is like
17.5.
17.5% of our value, we think Tesla will continue to go down. But that means we're still keeping basically 60% of our Tesla stock we're still keeping, right? So we're not like, we don't know that Tesla is going to go down. It could totally go up, right?
Yeah, of course.
If we knew Tesla was going to go down, we would sell 100% of it, but we would still keep half of our Tesla stock because of root, right? So even if we think a Tesla is going to completely crash, we're still keeping half of it because we don't actually know. No one knows exactly what's going to happen with the market. And so root is not about trading the market. We just keep half of our value is just in whatever the market is, and we don't care if it goes up or down. Okay? This is just the half that we're playing with. Does that make sense?
Yeah.
So everything is just very stable. And it's all about diversification, and that's also why it doesn't really matter whether we're right. Like if we're guessing wrong, it doesn't matter. If Tesla goes up, and we lose that value, it just doesn't matter because it's a small percentage. And the same thing true if it goes down. We think it's going to go up and it goes down. It's, if SPY goes down, it really just doesn't matter. We're just playing with the numbers and betting our luck on it. And we think this is, and the overall general idea is that because of the trends in market systems, by taking half of our value and putting it into diverge and just diverging it ever so slightly, 5% here, 10% there, 20% here, over years and decades, that's going to create tons and tons of value. These little tiny minute changes here and there. Does that make sense?
Mm-hmm.
Yeah. But we're not going for lots of value in any, like, we're not doing day trading. We're doing long-term small changes in value can equal big amounts of money in the long term. Because when we're guessing based on, real value. So the goal is that it does kind of average out. So you can see here, Apple is the same thing. It's basically flat, but slightly down. But the difference between the flat and slightly down of Apple and the flat and slightly down of SPY is that Apple never really went down. It just went flat.
Yeah, Apple,
Flat
I would say 50.
a little bit
50%.
down.
I wouldn't
really.
I wouldn't touch Apple. 50%, I would say.
I would say potentially above 50%, right? So because you can see it's flat, but it's gone up so high and then it didn't go down. It's held its value, right? So for me, I would say 70%.
Okay. Yeah, makes sense.
Or 71% even, because again, we're looking at the 5-year trend, not just the last couple months, right? So if you look at the 5-year trend, unlike a lot of the other stocks, Apple held its value, which means when everything starts going up, we want as much of Apple as we can, So we could easily do 100% Apple and it wouldn't really matter because it's not really crashing, Maybe we should do 75. I would do as high as we possibly can on Apple.
All right, 75. Yeah, we need to keep something in root. We want to keep something in root, right?
Everything is automatically in root. We're not even talking about root. We're talking about diverge right now.
We're talking about diverge, but the 75 is that we have 50-50 in root and diverge, right?
No, this is only regarding the 50% that's not in root. Root 50%, we're not even talking about right now. We're only talking about 100% that is the 50% that is diverge.
Right. So 75% means that we want to increase our Apple from.
No, this would be betting 25% that it is going up and selling 25% that we are not 100% sure. Right? So this would be selling 25% of our Apple. So if we don't want to sell any of our Apple, we would do 100%. You know what I'm saying? Anyways, I don't think we need to do 100%. I would say the maximum would be like 75, 80%. But if we want to maximize it, we could just say 80%.
Correct. Okay.
Does that make sense?
Got it. Yeah.
Okay. All right. So NVDA. Here. So NVDA is a little bit messy. You see how its chart is actually significantly different than all the other charts we've looked at. So it went up and it actually, it continued to go up during, it barely got touched by the pandemic, and then it just basically almost spiked, and then it basically crashed down for a very long time, and now it's going up. So I mean, for me, this almost looks like it's on an uptrend, that it broke. You could see here it totally broke the downtrend, and it's actively on an uptrend. So I would say this is flat up. So for my assessment would be this is a flat up and broke the downtrend and is continuing up. So I would say, either 75 or 80. It is a bit what do you call it? Volatile? A bit volatile. Similar to Tesla. So Tesla's also volatile. But either way, I think this is definitely a much more uppity sort of thing here. Like
I think 70, 75 is okay.
70%.
Yeah, 70.
75%. Okay, good.
All right.
A Microsoft.
Okay. Microsoft. Oh, no, that's wrong.
down.
Yeah.
I mean, this just looks like it peaked and now it's just going down. I mean, it's kind of flat. I would say a down with a slight flat trajectory.
Yeah.
So maybe like 25%.
No. I mean, it still kept its value. You know, it went up a lot, and then you can see that it went down, but it's still.
The last time it was going up was 2021, and it's 2023.
Mhm.
So it's been on a downward trend, and you can see it's definitely just barely breaking this downward trend. So
Yeah.
you know, I think it's definitely flat right now. So we could say like 40%, 30%, 45%.
Yeah, I mean, I think if we give 32.5 to Tesla, we need to give something higher to Microsoft, like 40 at least. Yeah.
All right, 40%. So last but not least, Amazon.
Amazon.
Okay.
Hey, wow, that's definitely going down. I mean, it was very flat for a long time, and then it started crashing. Here, when is that?
It's gone down by over
July
50%.
2022. Wow.
It's gone down by over 50%.
Yeah.
I think it's the pandemic blues because I mean it was just doing so good during the pandemic, and now it's like everyone's like, oh, people aren't using Amazon as much, so it's like pandemic blues. But I don't think it's a bad stock or anything. I mean, obviously it's still, but it does have this downward trajectory, and it's not looking good.
It went back to pre-pandemic prices.
Yeah, pre-pandemic prices. But the probability it's going to go lower than this is pretty low. Let's take a look at all time.
Okay.
So it went down. It went back to like here. So if you look at the trend, it broke the upward trend.
Mm-hmm.
So I mean, most likely this is a rebound. Like so, I mean, the probability is that it's gonna come up, it's coming down, and then right here is the overall trend line, and it's gonna come back here. So the question is, how much is it going to go down before it rebounds? And it can't go down too much further, but it could go down a little bit. It's very odd though that
Yeah, but if you take away all this pandemic bubble, like which is basically this this mountain,
right,
and you see it went back to the prices, right? Yeah. So
I think it's gonna rebound, right? It's gonna go down. It's gonna rebound right here, back up, but that's still about 3 or 4 months away. So it could still go down lower, but not too much lower. So anyways, I don't think it needs to be a 0%. I think I would put it at like 20, 25, 30, whatever.
30.
Because I think it's near the bottom.
Yeah, I'd say 30.
Okay. Cool. So we are done. All right. So that's this responsibility. It should be very easy now that we have the links. You guys look at the links, you get the percentages, and it's done. Super fast.
Okay.
Okay. So then that brings us to responsibility number 4. So the actual calculations, the percentages.
Mm-hmm.
So the only other question that I have here is that, Apple's 80%. We might want to buy additional Apple and like NVDA, and the only other one is SPY. So the question would be, do we want to consider buying extra SPY, APL, and NVDA? Or do we only buy extra if it is at 100%? Right? Because if we're buying extra value of something, why would we buy extra value of something that is, 100. That's not 100%, right? So that's the idea. And you could think of it in the general context. The other context is the US dollar. So if you think about US dollar, you can do the exact same context where in relationship, because remember the US dollar is at the back end of all of these.
Yeah.
Right?
Yeah.
So if you think about US dollar is basically equal to the opposite of all of these. Right? So this would be the US dollar breakdown. Right? So in that context, if you broke it down like this, you might want to add more, like here you obviously want to get rid of US dollar here and here and here. No, here and here and here, right? So in that context, the 80%, the 67%, might actually be on the higher side. So if you take 67, 80, and 75, you compare that to the US dollar side, which is basically 70, 60, and 67, right? You compare those two together.
Why do you compare the 60 to the 80?
Because you're looking at the relationship between the top stocks versus the top US dollar. So in this, technically speaking, under our estimation model, you could argue that we are predicting that the top stocks are going to go up in value by about 10% more than the US dollar. Right? So that basically we're saying, like, when we sell, because remember, when we sell all of these, we're buying US dollars, right? So if we have US dollar, then we need to rethink the relationship between the top stocks and the US dollar. And do we want to, because remember, responsibility 4 is to calculate the exact percentage of each stock that we're buying and selling, right? And I think, we do need to consider buying extra SPY, Apple, and NVDA because it does not need to be 100%. It does not need to be 100%. It only needs to be a higher percentage in relationship to the US dollar value percentage expectations. So our US dollar value expectations is 66% for our top 3 US dollar trades, and our stock expectations is 74%. So this would imply that we want to increase our stocks 10% above just our US dollar sell. Does that make sense?
Yeah.
So I'm not sure exactly how to do that, but we will figure it out. So let's say this one, and that one. So when we sell QQQ, Microsoft and Amazon, we should put 10% of the value not in US dollar, but in
other stocks,
specifically SPY, Apple, and NVDA, right? And so if we get the, so we can get this all perfect here. So watch. So the first thing here is that this would get
why would you want to sell QQQ and not Tesla?
We are selling QQQ or Tesla. So Tesla, we are selling a ton. We're selling Tesla. We're selling 67% of the 50% we're selling. Right? Remember, when we multiply it by 50%, everything, and we're going to do that. Responsibly 4, we're going to do the 50% calculation. All that's going to happen, right? Yeah. But the point here is that the value of the US dollar based on our calculation is equal. 67% and 66% is the same. So just by keeping the US dollar in relationship to the Tesla, that is the same value for all of the stocks. Whereas for Amazon, when we sell the Amazon stock and we have 70% US dollars, it's more US dollars than we actually need. So of this Amazon money, we could just put that, for example, this is the lowest one. So this is Amazon. And then we put that into the highest one, which is Apple. So if we turn our Amazon stock into Apple stock instead of US dollars, we're increasing our total value trajectory by almost 4%. Right? No.
Yeah.
8%. We're increasing it by 8%.
Yeah. So all our
it's 8% plus 4%, so it's actually 12% increase. So this would give us a 12% increase in value expectations than only holding US dollar. So because we're going to sell the Amazon stock, right? We're selling 70% of our Diverge Amazon stock, right? And so when we sell that, we would put it in US dollars. But we're saying instead of putting it in US dollars, if we put it in Apple, it will increase our value expectations by 12%. More than just the US dollars. That makes sense? And so then the next one would be
this is all based on our estimation based on the charts.
Exactly, all based on our estimation based on the charts.
Yeah. So
for example, for Microsoft,
but why are we using only the top? So
we're just doing the top
only the top three.
Yeah, the top three, because that we don't need to do more than that. It's just like whatever the top stocks are. I mean, if we did do the top one, which is Apple, we're saying Apple's the best stock. We could just put it all into Apple, right? So instead of only having US dollars, everything else we put in Apple that we're fine not being in US dollars, and then bam, we've created a portfolio. But Apple might be a little bit. So instead of just Apple, why don't we do the top three stocks in the bottom three stocks, and then we swap them?
But these are not the bottom three.
For Microsoft, instead of selling to only US dollars, we would sell Microsoft into the next highest one, which is NVDA. And so that relationship would be Microsoft would be 60% down, which is a 6% difference. And then this is 75% up, which would be a difference of 10%. So that's going to be 6 plus 6, like 16+% increase in value expectations and just holding the US dollar. And then the last one is
I still understand why we don't put Tesla here in the lowest three. We're putting Amazon, Microsoft, which is 60.
Because when we sell Tesla, because we think Tesla is going to continue to go down, the value trajectory of the US dollar is much higher in relationship to Tesla than it would be in relationship to Apple, for example, right? Or even well, Amazon's higher. Wait, did I mess something? Oh, you're right. Maybe I messed up. So the top three are Microsoft, Amazon, and Tesla. Yeah, you're right. I did mess up.
Tesla.
I just messed up. So it's
all right. So
67. So Amazon is the top one, 70%, right? Then the second highest one is Tesla with 67%.
Tesla. Yeah.
So I just messed up. So this is Tesla.
Okay. Got it. Perfect.
And then the 60% is Microsoft.
Perfect. Okay, now I get it. Okay.
And this one is SPY.
SPY. So we would sell SPY to buy Microsoft. No.
We would sell Microsoft.
No, we would sell Microsoft to buy SPY. Yeah.
Right, so for Tesla, for example, it's at 68 in relation to 66, so that's a 2% difference, and then you have 75 related to 66 is a 11, so it's 13%. 11 plus 2 is 13% increase in value expectations over only having US dollar. Right, so if you just sell your Tesla stock into US dollar, and Tesla stock goes down, we're still going to make money, right? But if we sell our Tesla stock and turn it into NVDA or Apple, we're going to make even more money.
All right, let me do this again. So
13% more than just holding the US dollar.
Correct, because we do the difference 68 to 66. So this would give us basically 2%. If we sell 2%, if we sell, so if we sell Tesla and we keep it in US dollar, we have a 2% expectation.
Exactly.
But if we sell Tesla and buy NVD, we have 2% plus 68 to 78.
No, 68 to 75 because we're buying NVDA.
All right. Okay. Yeah. You do this first, this, and then this. 65 to 75 is 9%.
9, 10, 11. So it's 11%.
11. Right.
And so this one would be 6 and then 1. So this would be 7%.
So this is 6. Yeah.
1.
6 plus 1, 7.
Awesome. All right, that sounds good. So overall, obviously Tesla has a lot larger percentage because the number 1. So we would obviously not be putting all of the Tesla into NVDA, and maybe instead we could break it up with a little more Apple or SPY. I don't know. We'll figure out what we want to do. But the other option is just splitting between all 3 and just going, like the Tesla stock, we could do exactly 1/3 Apple, 1/3 NVDA, 1/3 SPY. Anyways, well, we can do a lot of different things, whatever we want to. It's very flexible. But this is important to basically understand our intention when we go into it. Okay, so everything else we're just going to sell directly to US dollar, except for Amazon, Tesla, and Microsoft, which we're going to sell more into Apple, NVDA, and SPY. Okay?
Correct.
Cool. All right, so we have a plan. And now we're just going to start finalizing the calculations. So the first part is going into the .calcs and do this calcs. Then we can copy and paste I think we actually need to go to the previous notes. So go to the previous notes here. This one. Yeah, this is the chart right here. Cool. All right, so I really like the model that we're doing where we are doing the percentage first, and then we come back and do the actual overall percentages. So we do need to finish this calculation right here, which is we have the sum of all the levels, the percentage allocations, and make sure this all adds up correctly. So 1, 2, oh, we lost this all, didn't we? Ooh, it's ugly.
We lost.
It's not working anymore. I'm trying to refresh.
Because I entered. I don't know. Let me refresh as well. Maybe it's me. It happens when we're like together. I don't know.
I know. I think it's just the spreadsheet too, because I feel like it works on the other ones, Yeah, it works fine over here. I think it's just this particular spreadsheet it's not working on. So I'm just going to copy this into our notes. We actually don't need any of that. We can just do these ones top.
All right, now it's
Going
working.
down to line.
Now it's working.
1. It's working now?
Yeah. Now it's working.
Oh yeah, you're right. It's working. Okay.
I refreshed. It's me.
Right,
it's me. It's me. Sometimes I come in. I need to refresh.
Here, 1 and 2. This looks good. No, this is 1 and 1, and then we have 8. And we definitely want the levels here. Did we get the levels from before?
Here.
I'm sure we have the levels, didn't we? Oh, here we go. The levels are right here. Levels. Okay. So boom. Levels. Yeah, so we're just doing 8. So basically it's 1, 1, 2, and then it goes up to 17. So this is 2, 2, 2, and then we have 34, 3, and then we have 39. Perfect. Okay, so that's all correct. This is all correct. And then we do the 8750, and then this should add up to 100. Make sure that's correct. 99.38. So something is weird. Let's make sure this is the sum of E2 to E11. So that's correct.
We're missing here the Bitcoin.
No, we don't want Bitcoin. Because we're subtracting the Bitcoin. That's why we're multiplying by the 87 point.
Well, the sum of level now it's 22. You change the 2 to a 1, so the sum of level should be 22 now.
So why is it not going to 22?
I don't know.
Why not 23? If I go to 2, it goes to 24. So I think it's correct. 23 is correct.
So now it's 100%.
Oh, I know what's wrong. It's the new. It does a new calculation of the stocks versus that. So we need to bring the stocks versus the thing back in here. So basically, you've got stocks and you've got crypto. So the crypto is equal to the Ether plus the Bitcoin, which is 13.04 now. See, it changed.
Mm-hmm.
Then everything else is stocks. So instead of 87, it's actually 86.96. That makes sense in terms of why.
Yeah.
And then we don't need that. And then, I guess it doesn't matter. All right. So then that gives us 100%.
Yeah, perfect. So we want to take this down though. Right. Oh, no, we don't need that. Mm-hmm.
Cool. So then these are our starting percentages. So we go back over to the stock calcs, which I seem to. Oh, that was the stock calcs. And we just go into the stocks. Yeah. So next tab over. So we just want to update this with the new numbers of right here, just to make sure they're all correct. Okay. So percentage. So we have Tesla 20%. So instead of 19, it's going to be 20. No, that was US dollar. All right. So then we've got SPY is 15.
SPI 15, US dollar 20, Kukuku is 10, Apple 10, NVDA 10, yeah.
And
Microsoft 10,
Amazon.
and then Amazon 5.
Yeah. Perfect. Right. So then that is done.
Great.
So then we need to estimate the total amount of the asset funds, right? That's the next step. So that we have the link current right here. So today is Tuesday, February 21st. All right. So let's get these updates. So maybe should we take a break and then do this, or do you want to?
Yeah, let's take a break. Do you want me to get the updated amount? That's in the spreadsheet already, right? The spreadsheet current BGC Trust. That's called the spreadsheet. BGC Trust Holding Accounting Spreadsheet, right?
Well, that's what I'm looking at right now.
Yeah. All right.
All right. So it says 87,947. Get back. 87,947.5. But that's just for the Wells trade. So
0.6.
We want to add it. Wait, no, we don't need to worry about the total because we only care what's in the Wells trade account. Yes.
Yeah.
Because that's all we're trading right now. So we only care about what we're actually trading.
All right. So that's 87.
So we don't care about the total
How much was
holdings. We only care about the single account. So all we need is that one number. So when we come into here, we just update this one number. So instead of 89, it would be 80.
6.031. Why? Said 87.
Oh, because there's cash. Wait.
Yeah, that's the total with the cash.
No, that doesn't make
No.
sense. I think it's just not updated. Because when I click on it and I go in, it says that we lost almost $2,000 today. So that hasn't updated yet. So that hasn't updated yet. So I think the total value is 86,031 is the correct value because today it went down.
86,031. Okay.
So we could just do 86,000, but anyways, 86,031.
Yeah.
Okay.
Cool.
So this number right here would be updated. These numbers are all updated based on our counting. And that should do it for that part. So then from here, estimated percentage on the calculation. So this would be the initial estimations, and then the percentage of value we're gonna calculate out as we buy and sell. So we're just gonna take these all back, start back to 100%, so that we can get the same starting point. And we have 50% diverge, 50% root. All right.
Let's take a break then.
Buying and selling virtually, and once you do the final calculations, we can do the final buying and selling for all.
Correct.
Cool. All right. Break.
Let's take a break. Yeah, and then we can go on. Perfect.
It's so dark. I'm trying to like walk through the house and it's so dark. Yeah. What? Yeah, I don't think that's me, man. I think I forgot to do the